Hello traders, and welcome to MultiFX Automation. In episode 4 now, we're going to continue from where we left off in episode 3. We looked at a particular strategy where we're using Bollinger Bands, and then we are going to try to continue in that journey and see if we can make this bot profitable. We're going to be introducing RSI indicator, right? And see if that helps us filter out the noise in the market. Okay, testing does require a lot of time, so you need to understand that to create a profitable bot. Back testing is essential, and of course you need good quality data at the same time. Usually it depends on which broker you're using, but you can also look at tick data so that you can get up to 99.9 modeling quality every tick data, right? We're going to show you what we've done with this bot. I tried to put some RSI sort of divergence method to it to filter out some of the noise, right? This is just a quick recap of what we tried to do last time. The bot was crossing the upper band, and on the cross of the upper band on the downside, it was taking the trade, right? And similarly, when the price moved below the lower band of the Bollinger Band and it crossed above it, we were taking the trade, right? So it was literally whipsawing a lot. So we introduced an RSI indicator, okay, to try and remove and only take more quality trades. All right. So if we were to quickly run this particular bot, we will see what the graph gives us. Okay. Just so that we can get a better understanding of what the original bot was doing. So let's go to version 1 of that. Just this one, the one I just talked about. So I'll click on start. And if we look at the graph, this kind of charts for you all the trades. Okay, you can see how many trades it's taking, and this kind of plots the equity curve on this particular bot. Right. Looking more like on the downside, so not picking high probability trades. This is what I can say, right? Okay, so I'll stop there. You get the idea. Eventually, we want to take this bot, to the upside and make sure that equity trade, it's more on the upside. Yeah. On the right hand side here is the dollar value, and the bottom line here is the number of trades that are being taken. Okay, so you can see there's a lot going on along here. So we need to investigate within this time frame what was the market doing, and then try and implement an RSI divergence strategy to filter out those trades. So what is RSI divergence, right? Let's quickly go on to ChatGPT and let's ask it to explain. So explain RSI divergence for taking better trades. RSI divergence occurs when the price and the RSI relative index indicator move in opposite directions, signaling a potential shift in the market momentum before price actually reverses. Okay, what it's actually saying, I've got a picture here, and let's try and explain this. So as the market is going up, okay, you can see that the market is going up in this direction. Okay, this being the relative strength indicator. When you from this point here, right, to that point there, right, the RSI is actually going in the opposite direction, right? So the price action goes up, RSI, the strength, relative strength index is going down, right? So you create that divergence. And hopefully, right, is this the sort of trades we want to identify and then take the trade on the downside, right? You can see it in this instance. If I zoom in a little bit more for you, okay, I'll get rid of all the lines I've drawn just to help you understand what's going on. I've already drawn with red. There's a candle there, break to the upside, candle breaks to the on the downside of the upper band, and then because for the configurations currently on the board is that for the last 15 candles, so these being candle number 1, and then number 2, number 3, and so forth up to candle number 15 over here. What he's saying is that provided that candle 1 is higher than the 15th candle, right, the close of the 15th candle, then that's identifying a bit of a movement to the upside on the price. And then similarly on the RSI, we're saying, right, that from candle 1, right, candle 1 being over here on the RSI and candle 15 being over here, what we're saying is that provided that the close of on the RSI is lower than the close of the value on the 15th candle on the RSI, then we have identified divergence. And provided that we have a pattern like this where there's a close on the upper side and then a close from the upper band to the bottom side, then we take the trade, right, to as a sell, and then we'll do the opposite for a buy. Okay, so for a buy, what we're looking at in terms of for a buy, we're looking to do the opposite. So the price must be sort of going down in a direction like this. It's going down, right? So creating a bit of the price must be going down, right? And then the RSI down here, right? The RSI needs to be going like on the upside, right? Needs to be going in that direction there, right? Creating a bit of a convergence, right? Divergence, convergence, right? You see the difference. So for a sell, we want to ensure that the price direction is going up and the relative strength index is going down. But for a buy, right, we want the market to be going down, right? Price direction down, but RSI is actually trending in the opposite direction, signifying that the market is likely to move to the upside, right? So you get the idea. So what we did is that let's look at the bot and the enhancements that we've done. This is version 2 now of the bot, where in the previous episodes we covered that one of the checkpoints, right, or gates that to satisfy the entries that the price has to cross either close below the lower band, or for a sell we have to cross on the upper band, right? And then we check if either or has been satisfied, right? Let's discuss what the bot needs to do as a buy signal. So to make that a buy signal, the bot has to cross the lower band to the upside, right? And because now we've introduced the RSI sort of divergence method, right? Another sort of way to filter out noise in the market. Then what we've done is this is the way that this has been coded. So basically on this particular function here, what we're saying is that the price, right, for candle 1 has to be lower than X number of candles to the left-hand side. But also the RSI must be doing the inverse, as we just discussed. So what we're saying is that the relevant strength index for candle 1 must be greater than the closing price of X number of candles, right? So if we look at that example we've drawn here, um, maybe let me bring up an example what that looks like on the buy side. So this example over here, right? We're saying that the candle number one has to be lower than X number of candles to the back. Okay, so if this is candle one, this is number of, let's say, 10 candles behind, right? So what we're saying is candle one has the close price of number one has to be lower than the close of candle number 15, for example, and on the ups and the RSI has to be pointing upwards, right, to create that sort of divergence. So on candle number one, the RSI has to be higher, and on X and candle number 15, the RSI has to be lower, right, and that gives us an indication that the market might turn. Okay, so if we were to run the new version of the bot, okay, which is this new version here where all three criteria have to meet. Okay, we've got an AND operator because an AND operator says is that this has to be true, that criteria has to be true, that criteria has to be true for it to take the trade. Okay, we won't worry about, we'll cover this in the next episode, right? I've also introduced a bit of an engulfing pattern, but for now, ignore the engulfing pattern that we have to we introduced. We just want to test the by introducing the RSI divergence to the strategy. How does that work out? So if I now look at version 2 of this bot, I'm going to turn off. I've made this highly configurable. I'm going to turn off the engulfing aspect for now. So the settings currently stand at, to put a fixed stop loss at 10 pips from the entry. Profit target is 30. These are the Bollinger Band settings, 22 for the deviation, standard deviation. And after every third candle, it will reset and the counter will start again. This is the look back number of candles is how many candles from candle one do we need to look back as a point of reference, and the RSI being 14. So let's now run this and see whether there's any difference from, this was the run of version number one. Let's have a look if by introducing the RSI has made any difference to the bot. So we'll run that. Remember, this is now version 2 of the bot. Let's have a look at the equity curve. Did it make any difference? Certainly taking a lot less trades, right? So this is filtering out a lot more trades than the first version that we recently saw, right? Which is great, it's good. But we don't want to filter out too many, right? And that's one of the aspects of doing a lot of testing, right? With various time frames, various configurations, eventually you're going to find a balance. What you don't want to do is, of course, over optimize, right? It's what we call curve fitting. You don't want the bot to be profitable over a specific period, and then when you forward test the bot, you get a completely different outcome. You can now see, right, that for the same period, version 2 of this bot, just by purely introducing the divergence, the bot, it's it it didn't go all the way down, right? Do remember that we still haven't introduced risk management techniques to this bot, so it's just running based on the rules of identifying price and RSI divergence. Yeah. So you can see the difference on the equity curve. The other one we just went straight down, whereas this one is actually filtering out a lot more trades and actually kind of just breaking even, basically. No, not making much of a profit at this stage. Okay, but you can see the difference that is made so far. Now, so just on that alone, then one of the best practices is to visualize how all those trades. When you run the bot, you can actually visualize those trades. Okay, and I did a little bit of a analysis on all those trades, which helped me identify what hours we can actually introduce to make to make this bot profitable. My observation was that when I ran the bot, right, even though it was identifying a little bit of a divergence there, RSI going down and prices going up, is that it was taking me out, right, all the time. It could be because the stop loss was too short, right? So it's not taking into consideration market momentum. Maybe we might introduce later on average true range to the bot so that he knows when the market is more volatile. And so it should take in more dynamic stop losses rather than being a fixed point, right? But in this instance, you can see that he was whipping me out, right? He got into a trade, and then the market continued to the upside when we were trying to sell short. So we're probably trying to make trades against the major trade, right? Let's have a look at another trade here. Again, I've got within these bands here. Usually, I use these vertical lines to when I'm reviewing my trades, right, to help me identify and focus just on this area and find it easily. I put two boundary lines there, and what he's saying is that price was going up, RSI was probably going on the downside, but then again, it took me out, right? Price continued going up to the upside, so not a very profitable trade. In this instance, the what you're seeing here in the red sort of boundaries, the two vertical lines. Let's have a look what happened there. Price was going down, right? RSI was gaining momentum to the upside, and then the price moved in the actual direction and it hit target, right? It didn't even come down; it just continued moving up. So it was a really good trade, right? And so over time, right, over analyzing those number of trades, I started thinking what would be another filter that we can introduce, right? So we didn't get knocked out all the time. This one would have been a profitable trade, as you can see, right? Price went up above the upper band, across the lower band, took the trade. However, it stopped me out, right? It goes to show you that because I've got a fixed stop loss, the price just took me out when it was going in the right direction, right? So that would have been a profitable trade should we had better risk management controls in place. So we let that one go. But what I did work out, right? I've marked in red, right, the profitable trades on this run, and I started came to a conclusion that the trades that were profitable was as a result of not only the RSI divergence, but also I noticed a almost like an engulfing pattern, right? Where the next candle, candle number one, okay, engulfed the previous candle, so candle two, right? And then we took the trade to the upside, right? So you can see here that's exactly what I'm talking about. All right, let's find another one, and you'll see the same, right? So this is another trade, right, that I marked between these two red lines. See, RSI was kind of slightly going up, right? And then the price was going down, Price broke below the lower band, moved up, right? And then it went to the upside, right? So another one. So look at another one, right? Price broke down. Price was going down. RSI was going up, gaining momentum. Then as the price crossed from the lower band on the way up, it hit target, right? You can see that there's a trend here, right? So what do we do? So what I then did to evolve the bot a little bit more, right? I then decided to look for a specific pattern, engulfing pattern, right? So every time we need to make a trade, we need to ensure that there's also an engulfing pattern, right? That gives us more confirmation that the price has really almost gone in, pushing the price in the direction we want that trade. So in this instance, right, we identify the divergence, right? So price going down whilst the RSI momentum picking up. We identify the engulfing pattern, and then we took the trade. All right. So how did we do that? So on the bot over here, I introduced a bit of a flag, right, to allow us to enable or disable the bot using a boolean, right? So that's done through these variables over here, right? On and off engulfing, right? Engulfing enable true. So what we do is basically to identify that, right? I used this functionality available here in FX Dreamer. Functionality allows you to identify if it's a bullish or a bearish candle. Okay. So what I've done is to mirror this trade here, right? If this is candle 0 at the moment, we've got candle 1 and candle 2. What we're saying is I want candle 1 to be bullish, I want candle 2 to be bearish, right? And then what we want is to say that candle 1, the close of candle 1, right, must be higher than the open of candle 2, right? I'm not going to explain how to read candles, but you can see that that was the opening of this candle and it closed down here. And then the next candle opened down here and then it closed at the top. Okay, but that's the criteria we're trying to meet. And so the way we code that on the bot is that we say number candle ID 1 has to be bullish, candle number 2 has to be bearish, right? That's what we just talked about. And then we also need to, the criteria is that the close of candle 1 has to be greater than the open of candle 2, right, to be an engulfing pattern. And then we proceed with the rest. So what does that look like now, right? I kind of started looking. Let's run the bot, right? So let's have a look. Let's run the bot and see how many trades it takes. Right, so we'll run it for a period from 2020 to 2021. And it's probably going to filter out a lot more trades than without the engulfing candle in place, right? Just again, it's just another filter. You might find that the more filters, the more indicators you put on your bot, you'll filter out too much, and you'll probably end up with no trades, right? Not the ultimate outcome. So the strategies, keep them simple, but again with good risk management. Yeah. So far, there's only been about 5 trades. Okay, so whilst the bot is running in the background, what we're going to see over here on the screen is it's a previous run. So this is the result of that previous run. Okay, within these two boundaries here, right? You can see that the bot was going up, took the trade, and then executed on the way down, right? Price going up, RSI going down, divergence, and then the bot identified the engulfing pattern, right? This bearish candle here engulfed the previous candle, the close of candle one, right? It's a lot lower um, than the open of candle two, and therefore it was perfect criteria, right, to take the trade on the downside. That was a loss, right, where we identify the divergence, engulfing pattern there, of course, but then it stopped the bot stopped us out, okay, and that's probably because the stop loss should have been down here, right, below the lowest low, right, allowing room for the market to breathe, right, and then continue to the upside. Now, essentially, that could have been a winning trade right there, right? Um, that was a loss trade. It's important to talk about the loss trades as well, because that's where you mostly do your learning from. That didn't go too well, right? Market continued on the upside. Let's look at another one, right? There was no trade taken there, right? So this is filtering out trades. This is just to highlight that in previous, without the engulfing pattern, this would have taken the trade right there, because the price went below the lower band, crossed the upper band. That should have been taken a trade, but however, the market went on the way down. So if it filtered that out, right? That's the importance of it now introducing an engulfing pattern to filter out trades, right? So here's another good trade over here. Engulfing pattern to the downside, and it was a profitable trade. Now you can see, right, now the engulfing pattern is enabled. There's only 19 trades for that period compared to when we didn't have that engulfing pattern enabled to take the trades, right? So we're filtering out those trades that are not giving you the edge. And then, of course, we do the same for the sell side, right? We do the opposite. Where now we're looking at a bear candle, and then candle number two must be a bull candle, and then the close of candle one is got to be lower than the open of candle two, right? And I think that's represented in here, right? Let's see if I can still. No, I don't have that anymore. But what we're saying is on the sell side, what we're saying is going back to here, number one is got to be a bearish, and number two is got to be a bullish candle. So number one over here is bearish, and number two, candle number two, is a bullish candle, and then we took the trade on the downside. Righto, we'll continue to test this, right? And then see how it works out. And what we might do in the next episode is that we're going to start introducing more dynamic stop loss. We'll introduce maybe an average true range, right? Where depending on the average range of a certain period, right? So this is the indicator. So let's say the average of the last 14 candles, right? That's the stop loss that we want to put in, right, on the bot.